Hello friends, welcome to Wealth Guru, and here I'm back again with another exciting video, and that's again a stock tip on a stock which has just been recommended by 5 Paisa. We'll go into the details of Century Ply and whether it makes sense for you to invest at this point of time, considering the market is almost close to 60,000. So let's find it out. Alright, so if you're new to the channel, I request you to subscribe to the channel because every time I bring in such videos, you can get a notification of this as soon as I post a video. Alright, so without making any further delay, let's get started. The stock that is recommended by 5% is Century Ply, and as most of you know, Century Ply is one of the biggest Indian manufacturer of plywoods, laminates, and PVCs. And they not only manufacture it, they also export a lot of these products to outside India as well. They are primarily operating from Kolkata, but they had recently opened an office at or a manufacturing unit at Punjab also. Just a background that this is a very old company of almost 35 to 36 years old company, started in the year 1986. So it has a long tradition of developing these products and exporting and selling it within India as well. That's pretty much a background of this stock. Now going into what really recommended by 5 Paisa. So this is what is recommended today. It's saying that the stock has been trading in a consolidation pattern for last 8 weeks, as you can see in this range, and now it is showing signs of movement from this range and is showing signs to move upward from here. So also the RSI and ADX also suggesting strong buy. So you can buy the stock in a range of 440 to 447 for a target price of close to 510, which is almost 15% up from here. And the stop loss you need to maintain is 416. So that's pretty much the technical recommendation on the stock. Now let's go into the detail to find out what the stock has been performing over the years and what the pros and the cons of this company. So let's go into those details as well. All right, so here we are. So this is how the 1 month chart looks like. This was in a range of, as I said, lowest of 381 and moved to the high point of 436. And if you look at the 3 month chart, it's almost playing in that range of close to 380 to 440, as you can see in this range. Now if you look at a 1 year chart, this has been it moved almost from 162 to the levels of 450. Just moved 3 times in last 1 year. 3 year chart also pretty much similar, but if you look at a 5 year chart, you can see that it moved almost to level of 3450 in 2018 and just went down to level of 100 during the pandemic and then moved up from there. So that's pretty much how it looks like. And if you look at how the historical the P has been performing, so this is how it looks like. The P was moving up a bit, considering the share price has also moved a bit. So that's how the P movement looks like. So the sales and margins movement look like. So the sales and margin have been in upward trend, and as you can see, the quarterly sales has also increased. Only in the last quarter it decreased a bit because of the lockdowns and all, but prior to that, for the last 3-4 quarters, it has been increasing. So that's all a good sign. Now let's see what are the pros and the cons of the company. The pros are the company has reduced debt. The company is almost debt free. There's no debt in the company. Our company is expected to give good quarterly results from now on because the lockdown has been lifted. So there's going to improve sales as well as profitability. On the cons side, the stock is trading at 7.65 times its book value. That's makes a bit expensive, not to that extent, but it's a bit expensive though. The company has delivered the poor sales growth of 5.36% over the past 5 years. The dividend payout has been low as 13.80% of the profit for the last 3 years. Pretty much the pros and cons are equal almost. But if you look at the stock, the biggest positive is it's debt free, and the lockdown story has played out. And right now, since the lockdown is lifted, it's supposed to make good profit from here on. So you can expect good stock price from here on. So that's pretty much the recommendation. So you can buy it now for technical gain of close to 14 to 15% in the next few days, and keep a strict stop loss to add on top of it. So that's pretty much it. That's pretty much the recommendation from Wealth Guru. So if you like this video, give it a thumbs up, and if you're new to the channel, I request you to subscribe to the channel because you can get the notifications every time I post any such videos. Alright, thanks a lot for watching.